one of the wealth twins. On this channel, we teach you everything you need to know about money and investing in order to build wealth. Today, I'm talking all about custodial brokerage accounts. I'm going to tell you what they are and how they work. I'm also going to tell you all about the pros and cons that you should be aware of. And if you feel they're right for you, I'm going to share with you how you can open up one in order to reach your family's financial goals. If that sounds good to you, hit that like button and I'll get started. Now, what exactly are custodial brokerage accounts? Well, a custodial brokerage account is a brokerage account set up by an adult for the benefit of a minor. The account allows you to give a financial gift to a minor, and it's a good way to introduce a child to investing. Now, usually this type of account is opened either by a parent or a grandparent in order to help to save money for that minor child. The person that opens up the account is called the account custodian, and that is the person that controls the account for the benefit of the minor. The custodian controls how the money is invested and how the money is spent. Any adult family member, court-appointed guardian, or organization can agree to act as the custodian of the account. However, the custodian must live in the U.S. or one of the U.S. territories and either be a U.S. citizen or a green card holder. Now, there are two types of accounts that are considered custodian accounts. You have the UGMA and you have the UTMA. The UGMA stands for Uniform Gifts to Minors Act, and the UTMA stands for Uniform Transfer to Minors Act. Now, both of these accounts are created under the state's law to hold gifts or transfers that a minor has received. And both allow you to invest in all stocks, bonds, funds, and actually invest cash. Now, the main difference between a UGMA and a UTMA is that with the UTMA account, you can also hold additional assets such as real estate and fine art. Now, when it comes to these type of accounts, there are no income or contribution limits, and also there are no early withdrawal penalties. So basically, custodial accounts are actually an easy way to open an account to start investing for a child. However, it is mandatory that the custodial account be turned over to the beneficiary once that minor reaches the age of majority, which, depending on the state that you live in or where the account was open, could be as young as 18 and as old as 25. Additionally, once you open up a custodial account for a minor, you cannot revoke it and you cannot change who the beneficiary will be for that account. Now that I've given you an overview of what a custodial account is, I think it actually would be interesting to give you some of the downsides to actually having a custodial account. The first downside would be how it affects financial aid. Colleges would calculate financial aid based on the assumption that 20% of the minor's assets held in that custodial account would actually be used to pay for college. Now, one way around this, potentially to get around this issue, is to actually sell the assets out of your custodial account and transfer that money that was made from the sale to a 529 college savings plan. Only the custodian can do this type of transfer, and you need to make sure that before you do that the 529 college plan actually accepts contributions from custodial accounts. A 529, if you're not aware of it, is a college savings plan sponsored by a state or a state agency. The money saved in the account can be used for tuition, books, and other qualified expenses when it comes to education. UGMAs and UTMA custodial accounts also have fewer tax benefits than 529 accounts. So if you're thinking about should you open up a 529 account versus a custodial account, those are some things that you need to take into consideration. However, unlike the college savings plan like the 529, there is no penalty if the money from assets from the custodial account aren't used to pay for college. Once the minor reaches the age of majority, like I said, anywhere from between the ages of 18 to 25, they can use the money that's in a custodial account for anything that they want. Now, another downside to custodial accounts would be taxes. Contributions aren't tax deductible when it comes to custodian accounts. Also, earnings, which is the money made from the accounts, are subject to federal and potentially state and local taxes. When it comes to contributions, each parent or grandparent can give any child $17,000 every year or $34,000 a year if they file jointly as a couple without having to actually pay the gift tax. This $17,000 per kid is called the annual exclusion, and it doesn't count against your lifetime tax exemption. Now, just for your info, as of 2022, the lifetime gift tax exemption is around $12 million, all right? So I don't know how many people are actually going to hit that gift tax limit, but just so that you're aware, it is $12 million. When you have a custodial account, you must add that to all the other accounts that you can actually give gifts to make sure that the total doesn't go above the yearly limit. Other accounts that qualify towards contributions would be the 529, like we mentioned before, irrevocable life insurance trusts, and other trusts that allow beneficiaries to withdraw contributions. If you go above the $17,000 per kid limit, you will have to report it on your tax returns, and any money over that limit will also be counted against that lifetime gift limit. Another tax that you should consider would be estate taxes. If a custodian passes before the account is transferred, the account balance will be part of the custodian's estate. Now, since grandparents can also be custodians and open up an account for a minor, this is something that you should really be aware of. There is also an earnings tax known as a kiddie tax. Since it's a little complicated, I believe the best way to explain this kiddie tax to you is really just to read it off of JP Morgan's Wealth Management's actual website. Now, the website states, if the custodial account generates more than $1,250 in income and a minor files a return, there is no tax on the first $1,250 of that income. The next $1,250 of income is taxed at the child's own tax rate. Anything over $2,500 is generally taxable at the child's parents' marginal tax rate. This is sometimes called the kiddie tax. If a minor also has earned income from a job, they are taxed at their individual rate on that earned income. The kiddie tax only applies to unearned income. Outside of taxes, you should be aware of issues that can surround the age of majority. Remember, it is mandatory that the custodial account be turned over to the beneficiary once they reach the age of majority. Now, the issue with that is that a person as young as 18 could possibly or will have access to what could potentially be a large amount of money at a very young age. Although some states do allow you to customize the age determination for a custodial account, remember I said earlier at the beginning, once you set up a custodial account, it cannot be revoked and the beneficiary cannot be changed. So if you set up an account for a minor, you should also instill in that minor the discipline and the value of respecting the investments that you actually put in for them. Or else they just might waste a great wealth building gift that you give them. The best thing to do, in which what we do with my daughter, is to sit down with them and show them their account and explain why you set it up for them, and also go over the different investments that they have in there. You can also teach them how to invest and ask them to do their own research and maybe pick an investment that should go into their account. They will give you some recommendations, and if they're good, why not use them? That way, not only do they actually get to be participants in building their wealth, they actually get to learn investing in real time. Really, this is a great opportunity for a minor to learn the power of financial literacy skills and do it in real time rather than just reading it or hearing about it from a book. We have our daughter check her account, and we actually have her calculate her net worth. Now, it might sound weird, but she actually does really enjoy seeing her money grow in her account and also calculating her net worth. Also, be aware that different states have different regulations, and the custodian account are subject to the laws of that state where the account was open. All right? Now, even though I did start with a downside, I want to give you some benefits of custodial accounts. Custodial accounts are a nice way to help you pay for your child's college education. You also have access to a lot of different investments. So if you're good at investing or you start early, you can give your child a good chunk of money by the time they actually turn the age of 21. Also, any adult that you know can contribute to a custodial account, not just a custodian. That means for birthdays and for holidays, instead of getting toys, you can ask people to contribute to the child's custodial account. Another benefit is that the earlier you can get started investing in a custodial account, the earlier you can get the money to start compounding. This will help grow the account for your child over a longer period of time. My sister Nadia and I preach this all the time. It's not about time in the market, it's about time in the market. The longer you have money invested, the better it will be in the long run, because not only will you get the benefits of compounding, you will also have a higher chance for your assets to actually appreciate. Now, if you don't know what compounding is, it's when the interest on your money that you invest actually starts making money for you as well. Now, as you can see here with this chart from Fidelity, it really does show you the power of investing early with just a little bit of money. Question for you guys. Now that you know some pros and cons when it comes to starting a custodial brokerage account, do you think the pros outweigh the cons and that custodial accounts are a great way to invest for kids? I would love to hear what you think, so please type it down in the comment section below. Now, if you're interested in opening up a custodial brokerage account, you can easily do so by opening up one at a financial institution. Some brokerages that offer custodial accounts would be Charles Schwab with their Schwab One custodial account. You can also open up one in Fidelity with their Fidelity custodial account, and Vanguard has a UGMA/UTMA account that could be used as a custodial account. I'll leave a link to each one of those companies' websites in the description below this video as well. I like to recommend these three brokerages a lot because they have high quality products, good customer service, and in the case of Charles Schwab and also Fidelity, they actually have branches that you can walk into if you have any questions or any concerns about your account. In order to open up a custodial account, a custodial brokerage account, you will need your child's personal information, including their social security number, as well as your own information, including your social security number. Now, once you open the account, you'll be putting the money in just like you would any other brokerage account, and you'll be choosing investments just like you would in any other brokerage account. At the end of the day, if you want more options than just a 529 savings account for college savings and just saving for your child in general for the future, a custodial brokerage account could be a good fit. Not only will it give you a little bit more flexibility than the other savings accounts for children, but it will also be an easy way for you to invest early and to build wealth for your child. If you enjoyed the info I shared in this video and want to learn more from the Wealth Twins in regards to money and investing, you should really consider joining our private email community called the Wealth Pack. I'll leave the link in the description below. Other than that, I hope you have a great day, and I'll see you in the next video.